You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options. Facebook.com/TheOptionsInsider or via questions at TheOptionsInsider.com.
Welcome to Volatility Views, the premier program for volatility traders. Each week, we'll take a deep dive into the world of volatility with in-depth analysis, trading activity reviews, strategy breakdowns, cutting-edge education, and much more. We'll also bring you exclusive conversations with the traders, researchers, and asset managers who are reshaping the volatility landscape. If it involves volatility, then you'll find it on Volatility Views. Volatility Views is brought to you by MIAX, one of the fastest options platforms in the world. MIAX is now trading options on the SPIKES Volatility Index, offering pinpoint accuracy, radically faster dissemination, and a highly transparent settlement auction for confident trading, all for competitive exchange fees. It's time to make a change and give yourself an edge with SPIKES. Learn more about SPIKES at www.miaxoptions.com/spikes. Options involve risk and are not suitable for all investors. The statements made are provided for information purposes only and are not intended to provide and should not be relied on for financial or legal advice. And now, it's time to take a deep dive into the world of volatility. It's time for Volatility Views.
All right, everybody. That music means it is time once again for Volatility Views, the premier program for volatility traders. My name is Mark Longo from theoptionsinsider.com, as well as, of course, from the ever-exciting Options Insider Radio Network. Hope you're liking the new addition to the network. We added something new for the advisors. Eric Cotton, his advisor team, putting together a new advisor-oriented show for you guys. Coffee with Cot, appropriately named, so check it out. Wherever you're listening to this fine program, if you subscribe to our full network, you'll already have seen that. Hopefully, you guys had a chance to check that out. Of course, wherever you listen to this, live every Friday, 1 p.m. Central, 2 p.m. Eastern, via Mixlr or after the fact on your provider, your podcast provider of choice. Make sure you hit us up. Questions, comments, insights, pearls of wisdom. We do indeed enjoy hearing from you guys. And if you enjoy what you listen to, head on over into that provider of yours and give us a nice little review. We like those kind of things, and they always help to feed the algorithms as the show continues to grow. It's been running forever, and it continues to grow, which we love to see. All right, and helping me get this volatility beast rolling and off the ground. First, let's go in order of distance. So all the way over, across the pond and beyond to a little quiet hamlet known as Sydney, where we are joined by Simon Ho, the CEO over there at T3 Index. And let's just call him the Spikes father. He is the godfather, the father of Spikes. Simon, welcome back to the show.
Thank you for having me.
And also joining us, I don't know, in order of distance now it gets a little bit tricky because I don't know where everybody is. So I'm just going to go next because I think he's probably closer. We'll see. Next, holding down the MIAX hot seat, we have John Smolin. He's the EVP and head of exchange traded products and strategic relations, a very long business card, over there at the MIAX Exchange Group. John, welcome back to the show. It's episode 2 now, so you're starting to get with the flow a little bit.
He may not be getting the flow of it
No,
yet.
He's lost the flow. I gave him, see, that's what happens when I praise people. They immediately lose the flow. All right, I'll see what I could do to get him back. Meanwhile, that tinny voice can mean only one thing. What is going on with you today, sir?
Not much. Just hanging out. I'm watching this market, and
You've reached the maximum
and
limit
I've
for
apparently
recording.
reached the
To
maximum
send a
amount of.
message,
All right, let me see what I could do
or
about that. You
hang
keep
up.
talking.
To play it,
I don't know where that's coming from.
I gotta say, I'm really
to it,
fascinated by the
5,
price action
to
today.
discard it. 6.
Vol is dirt cheap
To send this message,
in VIX and
press
spikes.
pound or hang up. To play it,
I am trying to hang up with this
3.
person. Let's just keep
I
on
know,
rolling.
I
Let's keep on
know, I
rolling
know.
right on
To add to
into
it,
the volatility
5.
review. There we go. That's a little bit better. All right, here we go. Vol review time. And we'll see if we can find John in the meantime, too. All right, here we go.
It's time to break down the latest developments in the volatility trading world. It's time for the Volatility Review.
All right, everybody, welcome to the Vol Review, the portion of the show where we review some volatility. And it is an interesting one to kick off our show here today. We've got most of the major indices apparently liking what they're seeing. You know, we saw on non-farms another kind of shrug of the shoulders for non-farms out there. A lot of people were maybe hoping that might give a little ammo to the vol space, or if you're on the short side, kill it dead. And it seems like it squeezed a little bit of the last air out of that volatility balloon. They were expecting around 180,000 jobs. They got 196,000 jobs in March, so slightly better than expected. They also revised up wages to 33,000 from 20,000. That's up 0.1% month on month, 3.2% year over year. Unemployment rate 3.8%. It wasn't, they're calling it, I believe, the Goldilocks report. Not too hot, not too cold, not a heck of a lot, but not enough to really boost and get the vol market really rolling, but enough to get the broad markets rolling. We're seeing most of the major indices moving in lockstep for the first time in a few sessions. They were all kind of all over the place for the better part of this week. One will be up, one will be down, mostly slightly, not a lot of huge moves. Today, we're seeing similar action. The Dow kind of feeling it's a little bit up about 0.1%, but kind of struggling to find its way. S&P moving more firmly to the upside of about 0.4%. And the NASDAQ feeling the lift, up over 0.5%. All that green on the broad screen means vol, of course, coming in yet again here this week. We're seeing spikes at about a 1280 or so. VIX Cash right around that level as well, about 1285. So spikes off about a handle and a half, and the VIX Cash off a little bit more than a point compared to where we were this time last week. And also, interestingly enough, VVIX down at 79, 8 points lower than where it was last week. And you know, if you listen to the show for any length of time, you know when it starts getting into the 70 handle, that's when things maybe start to get a little bit interesting. All right, speaking of interesting, let's see if we've got everything clarified now on the old guest line. Let's start with Mr. Meatball, because I see you in there. I know you're alive, sir. Mr. Meatball, sir, what's been catching your eye this week?
Yeah, you know, you hit the nail on the head. Vol is a couple of things. While on one hand, and these usually don't go together. On one hand, we've got the vol of vol just absolutely sinking, right? But on the other hand, we're seeing the amount of contango stay really wide. And that's unusual. Usually you see one or the other, not both. So I think that's probably the part that's most fascinating to me, is that, we have not seen necessarily the vol of vol. We haven't seen the normal things that happen with vol of vol tanking happen with the VIX complex itself. We've got the low VIX, what you expect, but those VIX futures are incredibly stubborn, and that is really unusual. You know, usually when we've seen this vol of vol, it's been at times where contango is at its tightest in a low VIX environment. Here we are. We've only got a few days left, and the spread between the cash index and the April future is you could run a Peterbilt through there.
Yeah, it's getting interesting out there. And let's see, I think we got all of our cohorts here back. Let's just see. John, are you back with us, sir?
Yes, sir. I'm back.
There you are. All right. I knew I jinxed you because I was just praising how you're getting the flow of the show down, and it immediately dropped you. So there we go. So I should know better than to praise praise your tech savvy, because that's when the gremlins will kick in. But
that is a good call.
So it's my fault on that part. But, John, it has been an interesting week. We've seen kind of ebbs and flows, mostly ebbing this week, particularly on the vol space. A lot of flowing on the broad market space. Anything catching your eye out there, and what's cooking in the land of spikes since the last time we chatted a few weeks ago?
No, from the spike side, we're still working, getting out to see people. We had a couple big institutional meetings. We have some of our top people down in Florida right now at a conference speaking about it, and just getting the word out, educating, getting really good feedback. But all in all, it's a slow process that we've talked about, and look for probably significant developments as we move into the early summer and late summer as we get closer to launching a future.
That's the big day everyone's waiting for, and I think we also got him nice and reconnected now to all the way back across the pond to Sydney. Simon, sir, it's been an interesting week. Markets mostly rally and vol, mostly coming in. What's catching your eye here this week, sir?
Well, I mean, I kind of agree with Meatball in that the vol levels at this point, particularly on the index, seem incredibly low. We've seen the first quarter, I think, was the biggest decline in VIX in its history. So it's amazing that from then, we've just gone past that period and it's still going down. It's quite remarkable. But also taking note that, as you mentioned, despite the cash index being so low, the sort of the midterm still seems sort of reasonably priced, sort of 16.5, 16.75 type ranges. So no, I find this pretty staggering, to be honest. So it looks to me a bit like this is a decent opportunity to buy some options.
Yeah, I think as the Greasy Meatball said, you can pretty much drive a truck through the cash to the front month of the curve, and that's pretty much what we're seeing out there right now. There's about not quite a 1.5 point premium between about 1.4 points, but still a pretty hefty space between the cash and that front April contract. May gets a little bit wider, a lot wider actually, about 2.75 point premium between the cash and the May futures. So there's a lot of distance there, which is interesting at this point in the cycle. And as Simon alluded to, and something we touched on recent shows as well, that the middle portion of that curve is interesting and oddly flat. And certainly as you start getting out there beyond September into October and Q4, it gets a little bit cheaper again, which is interesting. We joked on the last show that why roll to August when you could roll to Dece for not that much more. So that's kind of the scenario we find ourselves in right now, where Dece is always a seasonally quiet period, usually. I should say usually, not always. Usually a seasonally quiet period for volatility, but still you can get the whole year for not much more than going to July or August or September. Certainly September. It's a 0.05 premium to go from September to December right now. So you get a whole extra quarter for not much. So it's kind of interesting out there. Speaking of interesting, let's see what's been lighting it up out here in the products this week. We have seen some OI ticking up a bit out there in the spikes options. Obviously, as John alluded to, still kind of waiting for that future. That's really going to be, I would imagine, the catalyst that's going to bring a lot of these size players to the fire. Looking at the OI list right now, mostly the top positions are fairly similar to where they were last week. There's someone who put on that May vertical, still the leader out there, the May 2025 vertical. It's been dominating the charts for a while. We need someone to go at that guy and bump him down the list a little bit. But May verticals, kind of similar to what we're seeing out here in some of the other vol products, where it's still a lot of upside. Dominating the tape. That's the case out here in Spikes Land as well. Speaking of size players, I know, Simon, you guys have been looking at some interesting stuff out there when it's talking to the market makers that are out there kind of taking the positions. In fact, I had some interesting overview of that courtesy of your first edition of the Spikes newsletter, which I got this week, which was kind of interesting. So why don't you walk us through what's going on with those desks there, Simon?
Yeah, sure. So, that's right. So we sent out the inaugural edition of the Spikes weekly e-newsletter. So that was pretty cool. We one of the things that we did was highlighted who are the liquidity providers for us, and they include Citadel, who's the DPLMM, so the designated primary market maker.
I've never heard of them. Who are they? A brand new name on the street, that one, so we're looking forward to that. But as well, you've got two veterans of the market in Group 1 trading and Susquehanna. So we're very pleased to have those guys as supporters of the business in terms of providing liquidity. So we really couldn't have asked for any more. One of the things that we were talking about before was, this is a bit of a chicken and the egg. You've got to get liquidity going, and then you need also people to come in and be confident. One of the ways that was put to me was that the market makers, you can actually, through your broker-dealer, you can actually, if you have an interest that's genuine, and let's say it's slightly oversized compared to, the trading that's going on at the moment, you can actually go to their show desk via your broker-dealer and sort of indicate an interest and talk about it, so that they know that it's a substantive or a real request, because at the moment it's not really, sometimes you're not sure. So that should help facilitate the provision of liquidity, because people can effectively communicate with them a little as to, what they're looking to do. So I think that's a pretty good way for people to start whilst we're in this early stage. Mr. Meatball, you live on those show desks, or at least trying to get some pieces off those every now and then, don't you?
I do enjoy talking to the show desks. And I think that's good to know. And, obviously on the retail wide, there is not the same interest at this point. But I think that if you're an institution, talk to your broker, and if you see something interesting, and I can tell you, if they show me it, I might want to trade it. I have no issue trading this stuff if it gets shown to me. Because, and I'm not a market maker, I'm a fund, but, a lot of big retail don't realize that there is a second layer of liquidity that is completely out there. So if you're interested in doing spikes, have them show these trading desks, and heck, have your broker show some of the other hedge funds, and they might be interested too for the right price. That's half of the paper I do in VIX, VXX, hopefully someday spikes, is stuff that a customer wants to do and isn't sure on the price, and they get a market from the market makers or from me, and I either tighten it up, because I was a market maker, so I'm pretty good at giving markets, and we'll do a trade. It happens all the time. So and spikes has such a nice correlation to VIX. If there's ways to price these two off of each other, I would be all for it. If I can sell, if someone is interested in that direct relationship with SPY, my ability to spread that off in VIX, I'd love to see take the other side of whatever flow you want to bring to spikes.
I'm still not convinced that May vertical wasn't you, or maybe the rock lobster, Mr. Meatball. I don't know, but that May 2025 has some rock lobster meatball written all over it.
That does. I did do a decent sized May trade today, but not in spikes, unfortunately. It's still although I may take a stab at that in the coming days and weeks.
It's getting there. It's getting on the radar there, which is, we'll talk about that in a second as we get into what else you traded this week, which is, of course, moving on over to the VIX complex. A bit of not a bad day, not a quiet day, kind of somewhere in the middle, not quite half the ADV on the tape as of showtime, or a little bit shy of 250,000. The ADV is a little bit north of 500,000 out there, about 523,000, which is down from the last few shows, I should say. So not a lot going on out there today. Let's see if we look at the top 10 out there. Let's start at number 10. It's kind of a bit of a call palooza, which you might expect given the fact that we've kind of been trending down for a while. We're getting towards the lower end of that range, and savvy listeners know we're getting down in the VVIX as well. That usually portends perhaps a bit of a move to the upside. So we're seeing paper kind of reflecting that in terms of what's open out there right now. Number 10, the May 20s, 212,000. Number 9, the April 24s, 234,000. Number 8, the April 30 calls. Again, the 30s always have to be open, 237,000 of those. Number 7, the April 26s, 265,000. Number 6, The April 22s, 275,000. Number 5, the April 20s, 327,000 of those bad boys. Then we get into our first puts on the list, the April 12 half puts with 423,000, so a lot of those. And then the April 13 puts, 426,000. Then we go up to May again, the May calls, May 27s and May 25s taking the top two spots, 454,000 of the 27s and nearly 500,000, 498,000 of the May 25. So size, again, continues to be to the upside out there in VIX land. Total OI, exactly. It's very rare we see an even number. Exactly 10 million, 7.68 million on the calls, 2.32 million on the puts. Let's move on out there to the hot trades we've been seeing out there. And in terms of today's action out there, there's pretty much a lot of it is in keeping with the OI we just talked about. A lot of upside love, at least for today's action. The big print today are the SEP 27s going up for 83 cents, 25,000 times. Leaning towards the offer opening, I'm gonna go out on a limb and say someone establishing themselves out there on September. And again, we've talked about it, that longer portion of the curve, not exactly pricing in a heck of a lot of juice. So if you want to get some exposure for the rest of the year, it's not exactly an expensive time to do just that. We also saw a little bit closer to home, the June 30s getting some love, going up in blocks of 10,000, at least two of these, maybe more going up today. So at least 20,000 of these June 30s going up for 38 cents, also leaning towards the offer. Not quite opening there because you might imagine there's some size OI out there in June, but still a decent sized paper going up in the 30s. So 30s and 27s, kind of the order of the day. If we go back a little bit this week, back to Wednesday, it looks like we had some other paper. We saw the double, June double calls going up 11,000 times on Wednesday on the bid, a dime. 11,100 times, so it's maybe a bit of a size aggressive upside, far upside overriding there. And we also had some funky ratio risk reversal, April 1520 going up 700 by 5,000 times twice, doing it for 78 cents, 700 by 5,000. I got to assume they're selling the 15 call, buying the 20 call. I haven't had a chance to dig up that 15 leg. I don't think they're selling that put. That would be interesting. So I'm going to assume it's the ratio call spread again, our old friend, that's a weird ratio. It's not even 1 by 5. It's more than that, and it's pretty wide as well, 5 handles. So maybe not exactly our favorite construction, but someone did it pretty sizably to the order of 1,400 by 10,000 total over there on Wednesday. And also a bit of a weird three-way vertical going up there was a May 15, 18, 19 vertical going up 8,600 times, I should say. Pretty much exactly mid-market on almost all of those legs. So maybe leaning a little buy on the 15. But funky, if it's a three-way like that, then you expect to see a little bit of a ratio to kick it in there like a fly, but we're not seeing that. So just a straight-up three-way, about 9,000 times, which is also all sorts of weird. In terms of the big print of the week, you got to go back to Tuesday. Looks like a bit of maybe some upside rolling. May 22, 37 half vertical going up 40,000 times versus the June 24, 37 half. Looks like they were definitely opening, at least on the June 24s. So it looks like it has the whiff of taking that upside vertical and rolling that out to June. We talking before, maybe you want to roll it a little farther next time because there's not that expensive, a little bit beyond June. Again, so a total of 160,000 contracts going up in that pretty sizable vertical all the way out to June. Mr. Meatball, anything else catching your eye out here this week in VIX Options? And what, pray tell, sir, regale us, what was your trade of the week?
There's a lot of paper trading. I was shocked at the amount of puts that, downside puts that were being bought. Big trade that I thought was kind of interesting. Size up seller of the June 20, the June 24 calls, which I thought was a little surprising. Meanwhile, in VXXB, which we're going to get to in a second, size up buyer of like June 57s. What we're seeing right now as a trend is a lot of the retail paper. And we'll talk, Simon and I will talk about this in a little bit because I'm gonna want his opinion on this. We're seeing a lot of the retail paper get long VXX, VIX, buying all that stuff up. Meanwhile, on the other end, hedge funds, pro paper are starting to get really short VIX futures. They're starting to build short VIX futures positions. So a lot of the paper looked a lot like that kind of price action, which is, call it unusual. I don't know if you want to call it unusual or not, but it was definitely, it's definitely interesting.
Yeah, interesting blasting away on the 24s. I don't know if I want that one right now. But then again, I'm sure he's got futures against there, something else like it. So obviously he's not just naked selling those calls. But still, yeah, that's interesting dichotomy. Are you seeing that as well out there, Simon? Maybe retail flow a little bit more bullish versus perhaps what we're seeing on the institutional desks, who are trying to squeeze every last drop of air out of the volatility balloon, even though we've been trending down for a while?
Well, I don't really have much sort of insight onto to the retail side of things, but certainly from our point of view, we have been establishing short positions on the sort of front end for the past month or so. But now that we're getting down to this kind of level where we're sub 13, I think you typically find that the resistance here becomes a lot sharper for the index to continue to go down. Obviously, there's still a fairly big premium here, so you kind of, for our positions, we'll probably hold them close to maturity because we want to roll down that, particularly the front end of the curve. But we have been sort of stubbornly short over the period, and sort of it is working out to this extent to a small extent at the moment. But yeah, I wouldn't be wanting to hang on too much from this point. I do think that if you look at some of the forecasting that we do, you look at SPX and you look at VIX, it's a sea of green in terms of relative history. So relative to the history in both of these markets, you're looking at some decently priced options across the board.
Yeah, I just think vol is way too cheap. I did a trade. They let me sell the 16s and buy the 20s 1 by 2 in May for a credit today. I was like, all right, I'll take a bunch of that if you give it to me. A 4-point vertical and with 50 some odd days to go, and they're going to let me do it for they're going to pay me to do it. I'll take that trade almost all the time.
Yeah, it's not bad. If you need to dump a few extra of those off, I'll take a few off your hands. That's not.
Well, you can go out and get them.
I can go get some myself right now. Excuse me while I pause hosting the show and go out to do my 1 by 2 vertical. But yeah, I definitely
that would be amazing, wouldn't it?
I definitely like leaning that way, and I'm with you. You're right. I have seen a lot of this institutional paper that it's still stubbornly, persistently short, and yet you're right. When I get a little bit of the old unease, the old spidey sense in the back of the neck starts tickling up. Whenever I see us drifting in the VVIX down into the 70 handle, that's when I like to maybe ease up on some of that paper a little bit. Obviously it can persist. Look at 2017. If you need an outlier year, everything kind of just stayed low forever. So it can happen. And that's certainly what a lot of paper is banking on right now. But we have seen so many times. How long does VVIX typically stay in the 70s? Not long.
Not long. And, we were looking at strangles, and there's all kinds of interesting vol trades that they're willing to give you right now that I think are pretty interesting. Another trade we were looking at today was the May 15, 17 strangle versus short a 24 call and paying less than $2 for that. I thought that was kind of an interesting spread myself.
Yeah, they're letting you get upside up here, which is maybe indicative of how they're leaning.
Yeah.
I don't know. It's interesting.
I'll take it.
Interesting. Speaking of upside, you mentioned the upside. This is not the usual use case for this product. Usually the use case, as we've said many times, for good old VXX, now VXXB, of course, is just all downside all the time. And we saw a lot of people get burned by that, particularly coming into this year. The Jan settlement was just a boulevard of broken dreams out there for all the OI that was south of the 30 strike and the puts. All of it went out worthless. We felt all of your pain, don't worry, and we still get your emails about that. A lot of you are still mad about that, and we understand. We feel your pain. But yeah, these days we're shy of that 30 handle again out there in good old VXXB. Coming into showtime, we were at about a 28. Let's see where we are exactly right now. Still at about exactly a 28. That's about 1.5 points lower than last show. So everyone who was hand-wringing and worrying, can it make it to the downside? Can we keep going shy of 30? We've seen a lot recently this year where it got to 30 and bounced back up, and just frustrating and stymieing everyone who was loading up on near-term downside puts. Not the case this time. It's been shy of the 30 handle for about a week and change. So it's managing to live down there again, which I'm sure is bringing smiles to the faces of a lot of our audience out here. Today we saw just about 100,000 contracts on the tape, ADV about 150. So a decent volume day, roughly 2/3 on the tape, but again, not blowing the doors off. Of course, I say it's going to bring smiles to the face of our. I know specifically our listeners like to use this product to the dark side, but we're seeing a lot of the paper out here, as Mark alluded to, is upside right now in VXX. Let's look at the top 10 positions out here. Number 10 is a put. Everyone's favorite, the 830 puts, but it's only number 10. Usually it's up there by number 1, the 30 put strike. And there's only 18,000 of those open. So maybe that is signaling a bit of a tonal shift out here in good old VXX. Number 9 are the 830 calls. There you go, flipping the script. About 19,000 of those. So the calls outpacing the puts right now, which is somewhat interesting. Number 8, the 32 calls in April, 20,000, almost 21,000 of those. Ape 26 puts, number 7 with 21,500. Number 6, Ape 27 puts, so a nice little put strip. 22, almost 23,000 of those. Ape 40s coming in number 5 with about nearly 24,000 of those. Ape 35's next, so getting some more juicy calls there. 26, almost 27,000 of those. Number 3, the Ape 25 half puts. Maybe some of that is because of what we're seeing today. 27,000 of those. And number 2 are the June 80s. We talked about these for a while. This is a very optimistic position, shall we say. Pessimistic probably for the broad market, optimistic for VXXB that it could make it up there or even anywhere close to that. And then number 1, not quite as optimistic, but still pretty bullish, VXXB, are the May 69s with 33,000 of those bad boys open up. Total's about 1.3 million contracts outstanding, 800,000 on the calls and about 500,000 on the puts. So calls leading the dance right now. In terms of what's lighting it up today, though, it's puts. It's all near-term puts. Looks like just an array of near-term April puts are lighting it up today. Biggest print, 5,000 of the Ape 25 puts for a nickel. Someone coming out saying, those are at a nickel? Yes, please, sir. I'll take some of those. 5,000, please. Ape 26 puts offered at 20 cents. Yes, please. I'll take some of those, too. About 3,000 of those. More of the 25 puts going up 1,500 more of those. So up to 6,500 of those now. And then another 1,100 after that. So they keep... Someone is persistently offered at a nickel, and someone says they're 4 cents at a nickel, and someone says, you know what, I'll take all I can get at a nickel. So we've seen, what is that, 7,600 of them go up so far, and that's just in the initial round of prints. I'm sure more have gone up since then. So I don't know, near-term downside is the order of the day today, Mr. Meatball. I don't know, are you liking... I mean, obviously we've seen downside work out so far, but again, this is kind of the moment when we get a little scared for that kind of stuff. Are you liking these flyers? Are some of these Carmen line? I know you like yourself a flyer in VXXB, but usually it's more a little bit longer term.
Yeah, longer dated for me for sure. I do like. I'll tell you what I do like is April expiration plays. I think we were looking at like the 13.5, the 14.5, 13 put spread is cheap. The 14-13 put spread is cheap. Next week's 13.5 puts are cheap. There is a lot of inexpensive, cheapy plays on volatility that I think makes sense, given where the spread between April and the cash index. April is like 1460, and the cash index is 1260. It's pretty nutty. I'm not used to seeing that kind of paper flow, and it kind of makes me really want to look at, am I interested in doing, those type expiration plays? And the answer is yes.
Sounds like you'd rather do them in the mothership VIX than in VXXB, though.
Yeah, I just feel like right now, at least for the next couple of days, there's more money in those expiration plays than there are in just, April VXXB. That said, as kind of the second half of a back spread, I do own some VXX. I do own some VXX April quarters that are just kind of the remnants of an older position.
Gotta love the remnants. They can turn out to be tasty sometimes, and sometimes they just fade away. Simon, I know you like to watch VXXB more as an indicator. Anything catching your eye out there these days? Are you surprised by the persistent erosion out there? Or are you maybe more surprised by the fact that so much of these outstanding OI right now, the size positions are to the upside? Anything surprising you about VXXB these days, sir, outside of the terrible name?
No, not really. I'm kind of I'm with Meatball. I think right now, if I'm going to be doing something to take advantage of that, I would. Look, I'm not favouring a lot of upside at this point. Yes, I think that vol in general is cheap in the complex, and that would be the same for VXXB. So I understand why people would want to put them on, but no special insight. I just think that this is. It's a natural reaction to what's happened. The Fed ultimately they've made a strategy change, and they said no more rate rises. You also have the number today, which really spurred investors along, and the Fed's also sort of buying back more bond paper as well. So these things are all auguring pretty well. It seems like a pure Goldilocks scenario to me, though. So I think we don't mind hanging on to the short-dated, short vol positions, but further out, I think you want to be looking to start maybe putting on some cheeky long positions. I really love the Meatball trade, the 1x2 that you did where you weren't. I think that's spectacular.
Well, thank you.
There you go. We all need to pause the
You're
show
welcome
right
to
now.
piggyback. I've done my size, so if you decide you want to piggyback, be my guest.
Y'all need to pause the show right now and go do some 1x2s out there because they're lining up favorably. Just keeping an eye on what else is going on in the vol space. This is the first time, Mark, both you and I think I know it on the show here, has attended the risk management conference. That's of course usually the institutional volatility summit. It was last week out in California. I tend to have a hard time making it out to the California ones anyway. It's just a bridge too far with all the other stuff we have going on. When it's in Florida, I could usually make it happen between FIA. I'm down there anyway. But when it's out there in California, it's a whole other trip. It's a pain. So none of us made it out this year. But I like to keep an eye on the research because there's a lot of interesting cutting-edge research coming out of that across the broad spectrum of volatility, seeing what's going on. And I looked at some of the abstracts coming out of there, the key papers they're releasing this year, the key studies. And stop me if you've heard this one before, Mark or Simon or John or any one of you. The big theme seems like, yet again, in terms of the key papers they were putting out this year, harvesting the volatility risk premium. Have you heard this term, Mark or Simon or John?
I have heard it. I've heard it from many, yes.
It's kind of our ongoing joke that this conference has somewhat devolved into a put writing extravaganza. Last year, when there was that little bit of, shall we say, a kerfuffle around February, all of a sudden those papers went away for a brief time. It appears they are now back. So apparently the time is now safe yet again to harvest the risk premium. Many reports to that, including this one by Makeda Investment Group. 27 pages on the efficacy of harvesting the risk premium, how it outperforms just being long, the underlying, a variety of other things. We talked about these before. I won't bore you with the details, listeners, but it seems like, once again, that is de rigueur in the volatility space. Moving on to the earnings side of the fence, kind of quiet these days, not a ton lighting it up out there from the earnings front, but there still were a few names popping off. Again, if you'd like to follow along with the earnings volatility game, we know a lot of you do, head on over to theoptionsinsider.com. We got those great free reports for you, courtesy of our friends over there at ORAT. So they break down all of the volatility goings on in the world of earnings. This week we have reports for GameStop and Dave & Buster's. Both had some interesting developments, both popping off after the bell. On the 2nd of April, so a few days ago, GameStop closed at about $10, $10.10. They were pricing in 81 cents for their straddle, which was about a 50% implied vol. They ended up delivering, looks like about 80 cents to the downside the other way. But again, you're a straddle trader. You don't care which direction it is. Unless you're own the stock, then you wanted it to be the upside, of course. So pretty much almost exactly in line. A lot of you guys have been interested in GameStop lately. A lot of you watching about maybe waiting for the death knell of that name. It's certainly got some interesting headwinds against it of late with everything moving digital in the electronic entertainment front. And Dave & Buster's kind of the the other end of that spectrum where they have the outlets, obviously people can go play there. Ticker symbol appropriately enough, play, PLAY. They closed at about $50.50 going into their announcement, again on the second after the bell. They were pricing in $3.40, so about a 35.5% implied vol, and they delivered $2.50, so a little bit shy, so about not quite a buck shy on that straddle out there. And those are kind of some of the bigger names we had popping off this week. Duluth Trading Company after the bell yesterday, if you're into men's undergarments, I suppose. That's one you might want to keep an eye on for. But I think a lot of people are waiting. It seems like we just got pretty much finished with the earnings dance, and we're already kind of getting back into it yet again. As a new season, a new cycle will be upon us forthwith. So, of course, stay tuned to theoptionsinsider.com. We'll have reports breaking down all those tickers for you coming up very soon. Speaking of breaking down tickers really quickly, the hot name in the equity space of late has, of course, been LYFT. They IPO'd recently, and they've been very volatile post-IPO. They IPO'd coming in around a 72. They rallied all the way up to an 88.60, actually, and then sold off almost immediately in the next couple of sessions down to 66.10. So they had a over 22 handle range over the past week and change. So yes, a little bit of volatility out there in LYFT, but those of you who are listening to this show know yesterday was also the first day of options trading out there in LYFT. It was a decent day. We saw about 37,000 contracts lighting up. That was towards the end of the day, maybe a little bit more by the time the closing bell rang. But I know going into option block time was about nearly 40,000 contracts on the tape. And the biggest print, surprise, surprise, post-IPO listing, it was a conversion reversal 3,100 times against 310,000 shares of stock. So you could almost, anyone's been around the space for a while, could probably write that playbook themselves. You know that's coming. You're going to see puts and you're going to see conversion reversals to get you the puts. And that's pretty much what we saw out there in good old LYFT. And now it's the time of the show where hopefully your mail's going to give us a lift. It's time to check in on the volatility voicemail.
It's time to share your thoughts and opinions with your fellow volatility traders. It's time to check the volatility voicemail. Make your voice heard by dialing 779-669-4VOL, posting a comment on the optionsinsider.com, sending an email to questions@theoptionsinsider.com, or posting your questions to twitter.com/options or facebook.com/theoptionsinsider.
All right, everybody, welcome to the Vol voicemail, the portion of the show. Whoa, we've got music kicking off all over the place. Music doesn't want to stop. It's the Vol party that keeps on going over there. All right. We got a lot of your questions. Let's dive into the live chat really quickly first, because they're all fired up about those verticals, Mark, out there we were just talking about. You're 1x2 out there in VIX land, not resonating with our old pal Timo, who listens quite a bit. And I can kind of see where he's coming from here, because I've talked about this before myself. He says he doesn't like to do those 1x2s for a credit. He says he prefers to reduce the distance between the strikes and maybe even pay a little. So in this case, maybe do a 16-18 or something like that. And that is something I've put out there on the show before too. We've seen people doing crazy wide ones and trying to maximize the premium versus maximize the structure of the trade. So I could see where he's coming from on that, even though yours didn't offend me. Mr.
No, because what I would argue is, how are you going to get it any tighter than 4 points? You're not. This is a 4 points wide is way tighter than I've ever seen this thing be able to trade at that level. The standard issue is, you're able to get about 5 points wide. You can do even money at about this relative distance, not where we are right now.
Yeah, I'd imagine if you quoted it tighter, like 16-18, you wouldn't maybe get quite a favorable of a market on that.
So I would say that while I agree with him, I don't know. I'm not sure that I've ever actually done a back spread like this with tighter strikes than this. This is, the gold standard is if you can get 5 points for even money, you do it. This is 4 points for a credit. So that's why this is why I like this trade so much.
Yeah, I mean, T-Mall is right. I do like that structure as well. And if you can go it that way, I concur with it. But it sounds like the pricing was just too hard to resist. Simon, you're a fan of this one, so I think you probably can agree in spirit with our listener, but maybe you like the execution of this one too.
Oh, absolutely, yeah. So it's horses for courses. So what do you want? Do you want to earn the credit, or would you rather have the strikes closer together? And I think that in Timor's case, it's a perfectly valid choice. In fact, I think probably most people would do it. As Meatball said, it is already a pretty tight spread anyway, but, it's just whatever floats your boat more. And in his case, I understand where he's coming from, yep.
He's a wise fellow. He's been listening to us for a while, so he's picked up on some vol wisdom. So well said there, Timo. This one, though, I think I'm usually with you. I'm usually with you on this one. This one I'm not as offended about for the reasons we just illuminated there. Let's see, White Leo, maybe Leo White. He wants to know, when do you think we'll see new inverse volatility tradable products hit the market? I miss the old XIV days. Well, you and a bunch of other people, I think, White Leo or Leo White, whatever you want to go by. This is the touchy area of the volatility space. Maybe, John, I'll start with you on this one because this is kind of your neck of the woods these days. New products in the volatility realm and dealing with the regulatory and legal hassles therein of getting approvals. We all saw kind of the immediate backlash against inverse vol products post last February when they all pretty much got wiped out. Or in the case of like an SVXY, they kind of got neutered to the point of irrelevancy. So we haven't obviously seen any new ones since then. We've seen a lot coming out from the commission saying they're not really going to look too favorable maybe on that going forward. But I'm curious for you, John. This is kind of this is where you spend your days here. For our listener, when do you think we're going to see some new XIVs hitting the market, sir?
Oh, that is a tough question. I think it's going to take a while, and I'm not speaking specifically to the request for this product. I'm just going back over my years of trading of when a product went haywire and how long it took for that cycle to be completed before it was accepted. There will be an acceptance period at some point, but I would be guessing, but I don't see it in the next. I think you've got to look at a period 2 years out before you even start to consider seeing that. Yeah, it takes time. It takes a change. The SEC is ever evolving, but the cues would come out of Washington before you see the exchanges move. So.
Yeah, I think you're right. You got to get some distance there. The wound is still too fresh. I have to give points.
Exactly.
I forgot which firm it was, John. I think it might have been Direxion. About 6 months ago, they filed not just for an inverse product, but for an inverse crypto ETF. And I had to kind of just tip my hat to the sheer audacity of that because they combined the two areas that the SEC has the least interest in into one product. It was inverse and it was crypto. And they just said, yeah, thanks, but no thanks. I don't think... I'm with you. I think those products serve a purpose if they're done well, and you could take some issue, obviously, with how XIV was constructed, hence its imminent demise and very sudden and catastrophic demise. So being done well is the key concept to that, and also B, that everyone who trades it understands the inherent risk of those products, and we also saw last time with XIV and SVXY that a lot of people didn't. Just judging by the feedback we got of people writing into us who were in for size with XIV, maybe because they're money managers, they looked at the chart and thought there's nothing but go up. Whatever the case was, there were people who should never have been in that product who were long a ton of it and didn't understand why it got wiped out. So it's interesting that I think they probably will. You're right, but it's going to be a while. Let's see, another buddy in the live chat, good old Mark Brandt, your buddy there, Mark. He says he wants us to embrace the coming Volpocalypse. Well, it certainly sounds like there's some paper, at least retail flow, that's leaning your way, Mark. Maybe not the institutional stuff, but maybe that is indeed the case. I always get a little bit itchy, a little bit nervous whenever we see VVIX in the 70s, and we're seeing that right now. So maybe, I don't know about a pure Volpocalypse, but I think a move to the upside wouldn't exactly surprise me here. Let's see. Here's a good name for you. PBW09. Say that 5 times fast. Hello to my favorite vol show. Well, right back at you, PBW. Thanks for keeping me company on the train every week. Love it. Five stars on all the platforms for me. Well, thank you. We love you too. He goes on to ask, my question. I know you've talked a lot about the VIXocalypse from last year and the meltdown of the inverse, another inverse one, and the meltdown of the inverse volatility products like XIV. Now, with the benefit of hindsight, do you think that the prevalence of inverse products made the volatility spike much worse than it otherwise would have been? Also, is the inverse true? And now that those products are dead, are we somewhat insulated from a repeat of a VIX spike, or VIX spiking, I should say, back up to 80? Well, yeah, great question. Yeah, I think we talked about that way back in the immediate aftermath of February of last year when it was top of everyone's mind. But yeah, those products definitely did exacerbate us to the upside, and I think we're all living with the aftermath of it as a result. Maybe, Simon, we'll start with you. Do you agree with our listener here that XIV and the other inverse products really, to borrow a pun, spiked us to the upside there? And do you think maybe now that they're gone, we are maybe a little bit insulated from those crazy upside moves again?
Okay, so this is a very, very interesting question for me. So the 2 parts. The first part is absolutely, mathematically, that is what happened. So we had forecast that this would happen prior to February simply because of the size of the trades, and we knew that at some point in time you were going to have a blow-up like this. It was, in other words, inevitable. The reason for that is that these products have inherent negative gamma. So for the issuer, the manager of these products, when the VIX goes down, they have to sell futures. Now, this is compounded by the fact that the execution of those trades is done at the close. So everybody can see through the course of the day when something's happened, oh, wow, this thing's gone down a lot. The issuer here, or the people managing the portfolio, are going to have to sell futures. And you can figure out how much that is, and you know what it's going to be. Likewise, if the product goes up, you need to buy futures. So it has what we call negative gamma. You know, you're selling low and you're buying high. So this was an absolute inevitability. And it was simply a matter of time for the moves to be significant enough that it destroyed these products, which is what happened in the XIV. So does that mean that this is a bad thing to do for people? Absolutely not. Vol-carry, you know, we talked jokingly before a little bit about risk premium capture. It's real. It's what VXXB, VXX is all about. It's capturing that vol premium. In fact, one of the stats I like to talk about is since options were first listed in Chicago in 1973, 85% of the time, options are worth less than what you paid for them, ultimately. And so, therefore, it's a very attractive premium for people to capture. So, absolutely, it was exacerbated by the fact that there are these products around. The second point that I'd like to make, though, is that we're actually talking to ETF issuers right now to develop spikes-related ETPs, obviously. And one of the things that we are doing, I run a vol business, have been doing it for many years. One of the things that we always do when we create strategies for clients is to ensure that they have a deterministic or a cap on the loss. So why is it, we're working on this right now. And I think that makes sense because then you can't get blown up, but at the same time, you can harvest the risk premium. Doesn't mean you can't lose money, but you know what it is that you can lose. And I think that's the key.
Yeah, and the other thing, I think that these guys, at least some of these firms have learned some lessons about the dangers of the TAS trade eating itself, which is kind of what happened with these products. And, I do want to make one small point around what Simon said, is, about 85% of products do expire out of the money. That is 100% true. One common misconception, though, is that means that there's just a monumental amount of easy premium in being short puts constantly or short volatility constantly. The 15% that do end up in the money are not, they make a lot more than the stuff that ends up out of the money. That is, one point that I think a lot of people do forget is that, when implied volatility is wrong, it tends, in terms of being underpriced, it tends to be really underpriced. And when implied volatility is overpriced, it tends to be a lot more reasonable because people will only pay so much for insurance. So, if you're not a smart person like Simon, or a smart person to a lesser extent like Mark Longo and I.
I'm sorry. Did I hang up on you by accident? How did that possibly happen?
You can get yourself into a lot of trouble selling premium. I've seen, if you are buying premium, you die death by 1,000 cuts. If you are selling premium, you die quick and fast, and you get bludgeoned to death in usually a single swoop, which is what happened to XIV, right? XIV, people who were long it, who were short it, right? They were bled to death just slowly over a long period of time. People that were long it, that thought, look how smart I am, the XIV walked up behind them and stabbed them right in the back of the neck, killing them instantly. And that's the way short vol and long vol really work.
Yep, long vol, death of 1,000 cuts. Short vol, quick and bloody, and probably very painful along the way. I love our audience. We could probably do a whole question and answer show because you guys ask so many great questions. We love them. Keep them all coming. You guys have inverse on the brain right now, which is, hey, why not? Go for it. Let's see. We got a bunch more here. We're not even going to have time to get to. Keep them coming, though. We'll try to answer them during the week, maybe on other shows, too. And maybe we will do that. Maybe we'll do like a massive Q&A palooza because we get so many great... Let's end on the silly one here. This is from Jim Daly. Spelled differently, though, not the other Daly. And he's... Yeah, it's not John Daly, at least. He wants to know, just to clarify, are they really staying with VXXB? There's no name change coming. Yeah, I feel you there, Jim. I wish they would. I haven't seen anything changing. Mark, have you seen anything changing?
No, I think that they are trying to forget the stain that was VXX and, grow a new product with, a great, what will invariably be a wonderful track record. Of benefiting the owner.
You don't like that 99.9% value death?
No, this time it's only going to lose 99.8% of its value.
Well, it lost it all, then it got it all back in the last few months of its life, right? VXX.
Yeah, no kidding. The only positive year was the year it died.
Exactly. So, yeah, maybe in that, looking at that in hindsight, but yeah, VXXB, I'm with you. Everyone who's written in the same question. I wish something else. VXX Prime, something better. I don't know, but yeah, get away from VXXB. Doesn't exactly roll off the tongue. You know what does roll off the tongue? It is the difficulty and danger of the crystal ball. So let's see if we could do it one more time. It is time for the crystal ball.
It's time to peer into the future and reveal what the volatility gods hold in store. It's time to look into the crystal ball.
All right, everybody, welcome to the crystal ball, the portion of the show that gets dangerous, difficult. Why does the music keep playing? I don't know. We're having one of those days, listeners, over here. We'll figure it all out as we look into the crystal ball. And yes, it's one of those times coming into this end of the show here. We're seeing VIX Cash hovering right around a 13 even, and we're seeing spikes at, looks like about a 12. Let me just refresh there. Yeah, 1278. So about a quarter of a point difference between the two. Remember, we're playing for two now. We're not just playing for VIX Cash. We're playing for VIX Cash and spikes. And so last week, our predictions were as follows. Simon tried to be the low man of the totem pole with 13 and a quarter, but he got scumbagged by the Rock Lobster at 13.20. So maybe a bit of a rough greeting to the show for Simon from the Rock Lobster there. I was a little bit higher at 13.75, so I'm about a point away from spikes and about 3/4 of a point away on VIX Cash. Simon would have been the closest, Simon, but it looks like Andrew scumbagged you, and so
oh my God,
he took it. He took
what a jerk.
He took great relish in that last week too, Mr. Meatball. So you got to talk to your compatriot there.
What jerk! And my one from 2 weeks ago probably would be a winner right now too.
If you had guessed again from 2 weeks ago, you would have been. All you needed was 2 weeks worth of erosion kicking in, and you were good to go. But since Andrew is in here, And since he did so blatantly scumbag you, Simon, I will allow you the dubious honor of going first this week. What are you feeling for this time next week, sir, in terms of spikes and VIX?
I'm going to say, so that's going into expiration.
Wait, I said Simon. Are you Simon?
Oh, I'm not Simon.
You're not Simon.
I apologize.
Back off. You're scumbagging him now, too.
Well, Simon says, I think that vols come down reasonably well. I reckon that it won't be too much lower. I'm going to go with 12.65.
12.65 for Simon. All right, Mr. Meatball, since you're compatriot scumbagged him, I'll let you have the fun of going second.
What did I guess? What did I guess 2 weeks ago?
I don't have it in front. I think you were like 12.35 or something
was
like
it?
that.
I think it was 12.40.
Something like that.
12.37. All right. I'm gonna go. You know what? I think we could be a little higher than where we are right now. But really, probably we'll go a little bit lower. Simon guessed what? 12.60.
Yes, he did. 12.65.
All right. I'm going to go 12.50. No, I'm kidding. I'm going to do 12.37 again.
We might have to boot you both off the show for such egregious scumbaggery. All right, here, I'm actually putting you by mine. That should be on yours. So we got 12.37 listeners, and we've got 12.65. I hate to play the Russell role, but it seems like I seem to be falling into that of late, where I've said all show, that I'm a little bit nervous about when we start ticking into the 70s out there in VVIX land. So everyone's already sucking up all the downside here. So I'm going to play a little bit to the north right now. We're at about a 13 even. Let's see. I don't want to go. I'm not liking too high. I'm going to say, tell you what, I'll say this time next week, I'm going to go 13.25 for both spikes and VIX. If you guys have your own prognostications, you want to play along, have at it there in the chat or via the social media. Maybe we'll include you in the rankings this time next week. All right. Unfortunately, that music means we come to the end of an epic sojourn, listeners, to the world of volatility. You know how epic it was. We talked all things spikes. We talked all things VIX, futures and options and everything else. We talked a lot of VXXB, a bunch of your crazy questions about inverse vol, questions about 1x2s. By the way, Mark, Mr. T-Mal would like you to post your P&L on that trade for next week, sir. So you have some homework.
And I'm going to hold it for longer than a week.
Obviously, but he's asking you for next week's show. So we'll have an update on it. We'll have an update on it for this time.
Was that Russell's weekly rundown?
That was Russell's weekly rundown. Our music is going crazy here today, listeners. So we're just going to kill the music. There we go. Thank you, Mrs. or Mr. Producer. All right, that's a little better. Let's just go around the horn the old-fashioned way. Let's start in order of the reverse way that we started here. Let's start to John first. John, you guys are obviously cranking away, new things going on in the land of spikes, working on new products, new underlyings, new fun things. Coming up on the big OIC conference, too, which I know is a big outing for you guys, a big endeavor for you guys planning all that fun stuff. So what's cooking in the land of spikes? And if listeners want to learn more over there at MyAx, where should they go? What should they do, sir?
Well, you can contact us through our website, and we respond to anything, any inquiries we get. Between Shelley, Joe Bracco, Simon, and the team around here, we're out talking to people constantly. I've been on the road the last 2 days myself. Another team in Florida, talking to institutional people, and again, getting ready for the big institutional people are all focusing in on the launch of the futures product. You did mention OIC. It's coming up at the end of April, first week of May. We're going to be doing a full panel talking about volatility as an asset class. Very excited to get that discussion. We're going to have a really good mix of people who look at volatility in different ways, and to get them to start the conversation, because it is an asset class that's here to stay. It's not going to go away, and it will show its true colors very, very soon.
Yeah, and if you, of course, listeners, if you can't make it down to OIC as usual, we'll have all the panel audio come in for you exclusively after the conference on our networks. You can check it all out for yourself at your leisure. Simon, same question for you. You guys obviously have the new Spikes weekly newsletter. If I'm intrigued, I want to go check it out and sign up for it myself. Where should I go? What should I do, sir?
Yes. So it's inaugural one. So each week what we do is we talk about some sort of salient points. We've got sort of top 3 points that we are spruiking through the course of the week, developments underlying what's going on. For example, this morning we talked about the show desk. So actually next week we talk to people about that. So that got well received, the high open rates and stuff like that. So we're just going to continue to sort of advise people about what's coming down the pipe, what the innovations are, the pricing schedule, all the kind of stuff that people would be interested to know to make their considerations about trading it. So you can go to t3index.com to subscribe to the newsletter.
There you go, t3index.com. Give them a follow on Twitter while you're at it, too, at T3Index. A lot of that good data analysis coming through during the week as well, in between shows. And last but not least, Mr. Meatball. So we've got homework for you on the 1x2. We have to have pricing for that next week. Oh, we have Stadini listening in the chat room, says we should call it an Ouroboros, maybe because it eats its own tail. Interesting suggestion for the 1x2. But Mr. Meatball, if I want to learn more about... I'm distracted by all of our suggestions here. If I want to learn more about your 1x2s or any other fun stuff you have going on in the world of volatility, sir, where should I go? What should I do?
Yeah, I'm going to be doing a free webinar on VIX, Spikes, VXXB, UVXY, SPXY on Tuesday at 9:30 Eastern Time. Go to optionpit.com/VIX2019 to sign up. And we're going to dig into all of these products, discuss how they all work, the benefits, the detractions, and you name it. It's going to be a really nice webinar. So get your butts registered. Incidentally, for those of you who are looking to meet Andrew T. Giovinazzi in person, I believe he may be involved with that OIC panel.
Andrew is actually leaving the confines of Maine, and he's actually going to a conference?
I have him flying to San Diego, Sacramento, San Francisco, and Miami, all in the month of May.
Oh my God!
What do you think about that?
He's going to collapse.
My wife put me in the penalty box on travel for a little while, so she's going to be in Cancun over that month. So I have to stay over most of those days. So I have to stay in Chicago while Andrew gets to go to
Andrew is actually going
Miami.
to the OIC conference. Oh my goodness, that's
it's going to be amazing.
That's going to be unprecedented, uncharted territory for him. Look for that, listeners. I'll have to make sure I grab him and drag him into our studio down there at OIC so we can get his take on the event and the panel and everything. That's not his. He likes to be in the hinterlands, not around people. So this should be kind of interesting, all of that. And on behalf of Simon, here we are gabbing on. We ran late, but it was a fun show. Simon and John and the Meatball and why not the Rock Lobster and myself. I want to thank all of you out there for downloading, streaming, subscribing, sending in questions, for listening live, for playing along in our broker madness. Coming down to the wire here, listeners. We're in the final four. If you haven't liked and voted and retweeted and shared and gotten in there to be registered for your fabulous prizes, already giving away some cool, fabulous prizes. More to come. Get in there, play along. It's fun. And we'll see you next week for more Volatility Views.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/The Options Insider, or via questions at theoptionsinsider.com.